Welcome to the deep dive video. This is a video where I go through the charts that I don't necessarily cover in the daily videos, the weekly videos, or the intermarket analysis videos. I like to only include charts in the videos that I do that are actually telling us something and are usually giving us some kind of an extreme reading. That leaves out a lot of the other charts that are still telling us something, but not necessarily a real extreme positive or negative reading. And that's what this video is designed to do. This is being prepared for Monday, March 6th. The first chart we look at is the VIX on the top. This measures fear. When the VIX is going up, that means fear is increasing in the market. When the VIX is coming down, that means it's decreasing. How this chart is different is on the bottom, there's a VIX RSI 9 period, and this tries to measure extreme positive or negative readings. Well, currently, the VIX has been going down as the market went up in Thursday and Friday session, and not necessarily giving us an extreme reading. This next chart is a new chart that I've been playing around with for quite a while, and this tries to define the range of the VIX over a period of time. What you don't see on this chart is the VIX itself. Over top of the VIX that I've made invisible, there's a 50-period moving average. That's this blue line that you see here. And this attempts to define what is the current range for the VIX. You can see from 2009 through about 2013, the VIX would go up to a high range of about 40, and then when it was coming down, it would come down to 20. Then from 2013 into 2020, before the COVID plunge, the whole VIX shifted down, and it was in a range between 20 and just a little under 14. After the COVID plunge, the VIX has gone back up, and it's now in a range between 27 and 28 on the top, and a little bit below 20 on the bottom. If you look over on the right-hand side, we're giving a reading of about 22. The attempt in using this chart is to replace or augment these static numbers. Typically, when the VIX is at 20 or above, that's considered high. When it's at 12 or below, that's considered low. I still look at those numbers, but I wanted to get something that was more dynamic that can change with different phases of the market. Another chart that can be interesting is the retracement from the all-time high, which was set back in January of 2022. Right now, we're down 16.04% from that all-time high. And over on the right-hand side, that's the current level of the S&P. Another thing that can be interesting are called technical alerts, and these are released every day. I only show the technical alerts for Friday's session because this list would become too long. When they're blue like they are now, that is more positive. When they're negative, they turn red. We read this from the bottom up, where first of all, the NASDAQ was able to get above 11.4, then 11.5, then eventually 11.6. The S&P was able to get back above 4,000, and then the energy sector had a bullish MACD crossover. And these are all the signals that were generated on Friday. Another interesting thing can be the index technical score, where there's a thing called the Scooter score, and this is an objective way of measuring how do these different indexes score on a scale of 1 to 100. Currently, the mid-caps are in first place, giving us a score of 84.3. When they get really strong, we like to see a score of 90 or above. In second place are the small caps coming in at 80.6. In third place are the diamonds coming in at 61.8. The S&P 500 comes in next at 47.9. And in last place are the Qs coming in at 40.6. So we've seen some improvement in our Scooter scores, but they're not giving us that 90 plus range that we would see in a really strong market. Some short-term indicators. I show a daily chart that looks just like this, but it only goes back 1 year. This is a 2-year chart showing the same thing with the downward sloping trend line that we were finally able to break above in early 2023. When we set the low in October, prices were going up, they came back down, and we can establish another trend line right here. Prices are kind of right in between this. They're staying above this trend line, but we did break down below this trend line for a few days, only to recapture that back in Friday's session. And we closed just a little bit above the pivot point. When it's above the pivot, that's positive. When it's below the pivot, that is negative. Then down on the bottom, we can also measure how volume has been behaving. Here is the short-term moving average rainbow going from 10 periods up to 50 periods. Price has recently been coming back up inside of the rainbow itself. In a really strong bull market, we'll see an upward movement of the rainbow similar to what we saw in 2020 and into 2021. When we hit 2022 and now into 2023, we're seeing a lot of choppiness. So this is waving all over the place. And I don't show this all that much. It might look kind of cool, but it doesn't really give us any real useful information. Some other intermediate term charts, the standard deviation shows as we've been going down and then Thursday and Friday we went up, standard deviation has really dropped. This is how far is price getting away from the average price over a period of time. When the market really gets moving in one direction or the other, it seems like the CCI 14 and the CCI 20 are shown in pretty much every daily video. Well, as we've been chopping around, the CCI charts have been more neutral. Looking back at the CCI 14, we were extreme negative and we're bouncing back up. We're still a little bit below this dash line. And looking at the 20 period CCI, extreme negative, bouncing up, but we're still negative overall. The mass index is not generating a signal right now. When we really pay attention to this is when this line goes up, it crosses the red dash line and then goes above the blue line. And then when it comes back down to the red dash line again, that is a signal that whatever's happening in the market, we're looking at a change in trend at that point. Well, it's just not giving us any kind of signal right now. The praying bottom fisher, it's just like its name says, it tries to pick bottoms in the market. And we had a crossover signal in the middle of February, but that kind of fizzled out. And now we have dropped below this moving average and it's not currently giving us a signal. The Connors RSI works very similar to the regular RSI where we're looking for extreme positive or negative readings. When we're above the dash line, that's more positive. When we're below it, that's more negative. We did spike up a little bit after Thursday and Friday's sessions, but we're not giving an extreme positive reading. But this indicator is still positive overall. Then we have an intermediate term rainbow chart going from 50 periods up to 100. We're coming back and staying above the rainbow overall longer term. So this is looking a little cleaner and actually is suggesting that things are turning back more positive. The vortex indicator, it's still negative, but the red line is really declining and the green line is really starting to come up. I haven't been showing this. I usually will show this after we see a cross. We could see a cross if prices keep going up, but we're not seeing that yet. The ease of movement, this looks at what is the path of least resistance. I don't look at the 1 period so much. I look more at the 14 period. And we had dropped below this dash line and we're looking more negative. But with Thursday and Friday's advances, we're coming right back up to this dash line. And this is currently neutral. The money flow index is a typical oscillator. When we're below 50, that's negative. When we're above 50, that's positive. Well, we dropped below 50, but we are starting to make a comeback. So this is negative, but it's showing some strength. The Sean trend meter, after giving us an extreme positive reading, really dropped down and was seeing a lot of the weakness that was in the market. Well, with Thursday and Friday's advances, we're seeing that turn back up and look more positive. The moving average study looks at the 20, 50, and 200-day exponential moving averages, and we're going higher with all of those moving averages and not getting an extreme reading currently. So these charts are positive. The boom indicator measures how far away are we from the 50 period moving average to price and the 200 moving average to price. When we get way far away, we're overextended and price will act like a magnet. It will come back to the average price. When we're above zero and advancing, that's positive. So that's what we're seeing with the 50 period and the 200 period moving average. And we're not giving an extreme reading on either chart. RSI, when we're above 50 and advancing, that's positive. And we're seeing that both with the RSI 14 as well as the RSI 9. The percent B indicator goes hand in hand with Bollinger Bands. When we exceed the upper or lower band, that's when we get an extreme positive or negative reading. When we're below this dashed line, that's negative. Well, we had been getting quite negative with this indicator, but it is showing some improvement. The Kopik curve, in early 2023, this gave us a buy signal, which suggested that prices would go higher, and that's exactly what happened. In the early part of February, this crossed over negative, and we're not getting a signal right now. Even though it is turning back up, it'll take a few days for this to generate some kind of a signal if prices continue to go up. This chart is pretty self-explanatory. It's how far are we above or below the 200-day simple moving average. When it's green and going up, that is more positive since we're above the 200-day simple moving average. The CMB Composite Index is a trading system. Personally, I think this generates a lot of false signals, but I use this more like an oscillator. When we get down to an extreme negative reading and then bounce back up, that suggests that things are turning more positive. But you can see we hit this lower level, but we still kept falling after that. You could make a case to say that there's a positive divergence here where price was going down, but the indicator was not going down as far, and then we're seeing a bounce up from that level. But where I use this the most is when it's either extreme positive or extreme negative. The ultimate oscillator is looking more positive. It crossed above 50, so that's positive and is advancing. The PMO study, still suggesting that the PMO is in a downtrend. We also have two other studies on here based on price and volume, and a lot of times these will cross over and give a signal before the PMO gives a signal. Then looking at all of our oscillators, our shorter term ones are trying to turn back up. The slope and the TSI, where the MACD is turning up a little bit, the PMO that I just talked about, and the PPO, where our longer term oscillators are still in overall downtrends. We've been dealing with the 50 period moving average and the 200 period moving average. Well, right in the middle is the 100 period moving average, where we had dropped below the exponential version of this moving average. We came down to the green line, which is a simple moving average, before bouncing back up. So this is looking a little more positive. Looking at some of our different charts, the Renko is still suggesting things are negative. We have red blocks. Nothing new was generated in the point and figure chart. We still have a signal that was generated on February 21st calling a bear trap. If we continue to go higher, some more X's will be drawn. If we continue to go down, more zeros will be drawn. If we go sideways, nothing new will be drawn. This is a chart that's based just on price movement, not taking into account time. Looking at a few long-term charts that I haven't been showing, here's a long-term version of the rainbow where it's looking kind of like a mess right now, but we're starting to come back up into the underside of this rainbow, and this measures from 50 periods all the way up to 250 periods. The Special K is a very long-term oscillator, which has been in a downtrend overall. It looked like it was making a run to cross back above this moving average, but then has turned down. This is a long-term moving average study. I keep the 50 period on the top just as a reference point, but then we look at the 150 and 200, where we're turning back up with both of these and not giving an extreme positive reading. So this is turning back to be more positive. Some broad market measurements that we look at, we have the Vixen. Here's the NASDAQ 100 on the top. I don't use this all that much because there's so much erroneous data in this chart. If anything, I look more at the line chart, which just gives us the closing values, and it shows as the NASDAQ 100 went up in Thursday and Friday session, it really dropped down with the Vixen. Then I just showed two rate of change charts. I have a number of other charts that I show, but I show those when we've moved too far, too fast in one direction or the other. This is a rate of change going back 250 periods, showing how we came down to test the COVID low and we're starting to bounce back up. Then this chart goes all the way back to 1980, where we could have gone even lower than what we did. We fell a lot lower than that in 2008 going into 2009, but this is looking a little more positive. Then some charts updating our possible positive scenarios. The percent of stocks in the S&P 500 that are above their 200-day simple moving average. When we get an extreme negative reading, a lot of times that marks a washout in the S&P. We had an extreme negative reading in late 2022, and we tested that low again, and we've been coming back up since we've been falling back. But over the last couple of days, we've seen some improvements in this chart. Then this is a 10-day average of the S&P 500 highs minus the lows. After giving us an extreme negative reading, it really started to shoot up. It gave us an extreme positive reading and since has been dropping back. This is based on the equity put call ratio. This goes back 253 periods and takes a simple moving average. When this is going up, that means the market is generally going down. If this starts to roll over and go down, this is a long-term trend of the equity put call ratio, and that could give some support to stocks, but it hasn't rolled over yet. Another thing we're keeping an eye on is the VIX to the S&P 500 correlation. It had been acting kind of strange for a few days, but it seems to have settled down now. When we really pay attention to this is when it goes above this dashed line. That can sometimes mark a bottom in the S&P 500, but there have been a few times when it also marked a top. So if we get an extreme positive reading with this, we just evaluate things at that time. Thank you. I hope you found this helpful. Please feel free to check out the daily video, the weekly video, and the intermarket analysis video. And after this, I will be preparing the supplemental video where I go through the current market valuation charts as well as the IsabelNet.com charts. I hope you're having a great weekend, and I will talk to you in the next video.